Hello, everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we start talking about an income stock, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. And understand that investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. The time is for royalty trusts like Permianville Royalty Trust, traded on New York Stock Exchange under symbol PVL. While energy prices are taking a breather on an expected weaker demand from China, both oil and gas are expected to be bullish in 2024. John?
Yeah, you're right, Mo. According to the Energy Information Administration, it raised its oil price forecast for this year and next, saying it expects U.S. production to hit record highs as global supplies tighten. It raised its 2023 forecast for crude by 1.1% to $79.54 per barrel, and raised its 2024 forecast by a whopping 12.1% to 83.51 cents per barrel.
And tell me, why is this good news for royalty trusts?
Yeah, well, royalty trusts are a popular investment for income investors because it gives them exposure to the energy sector and it provides frothy monthly dividends. They generate royalty streams from the production of various commodities from different energy assets, and investors or unit holders are rewarded with regular distributions based on royalty payments received by the trust. Royalty trusts aren't entirely different from master limited partnerships or real estate investment trusts, and that they avoid paying federal taxes so long as they transfer at least 90% of their taxable income to unit holders in the form of a high yield dividend. But like any investment, royalty trusts come with inherent risks. Because Permianville Royalty Trust works in the energy sector, its cash flow can swing wildly from month to month and year to year with the ups and downs of energy prices. They also don't explore for new gas and oil deposits. What they do is they milk their existing wells, and eventually those wells will run dry. But for investors who understand the ups and downs and the risks of royalty trusts, they can make for attractive income streams.
Well, what can you tell our viewers about Permianville Royalty Trust?
Well, Permianville is a Delaware statutory trust that owns rights to receive 80% of the net profits from the sale of oil and gas production from conventional properties in Texas, Louisiana, and New Mexico, as well as unconventional assets in the Permian and Hayesville basins. As a point of reference, conventional oil and gas properties, they use vertical wells, where unconventional resources are extracted through horizontal wells, well bore, so they go down and then go across. So they're more labor intensive. But again, the company is pretty straight up about its monthly dividends, and it notes that the amount of its distribution will fluctuate depending on the actual production volumes and gas prices, the amount and timing of capital expenditures, and the trust's administrative expenses.
And since you said it, let's talk a little bit about dividends here. How are investors treated and what's been happening recently?
Lots of good things. First, it's important to note, remember that Permianville pays its distributions monthly. As a result, it releases its financial results on a monthly basis. And as expected, the payouts can fluctuate wildly based on supply and demand. For example, this past June, it recorded oil cash receipts of $2.7 million with an average price of $71.94 per barrel. Now that's down from $75.60 per barrel in the previous month. This resulted in a monthly dividend of 0.0125 per unit, or 40 cents on an annual basis, for a yield of 16.68%, which is huge. That's triple the inflation rate. And the company actually has a long history of paying high dividend. It's not just coincidence. The trailing dividend yield is 18.8%, while the 5-year average dividend yield is 14.49%. And if you look at the chart, you can see how much Permianville's dividend can change month to month and year over year. For example, in 2022, its total payout was 0.4415 cents per unit. It's much higher than the 11.95 cents it paid out in 2021, and higher than the 0.13 cents per unit it paid in 2020. The big discrepancy was because it didn't pay a dividend from July 2020 through July 2022, but that's not a big surprise. The pandemic gutted much of the energy sector for that stretch. So far in 2023, it's paid out 15 cents per unit. That's already more than what was paid out in either 2020 or 2021.
As you mentioned, the dividends fluctuate here, but they are monthly. What's happening with the stock price here? PVL belongs to the energy sector, and energy sector was one of the hottest thing in town in 2021 and 2022. What's happening here with prices?
Permian royalty stock is definitely recovered from its COVID-19 related losses, up more than 570% from November 2020 lows of the 0.364 cents per unit. PVL stock has been trading in a relatively tight range over the last few months and is currently trading just above a support level of $2.40 per unit, but it has shown some resistance at $2.50 and then at $2.62.
All right, John, thank you so much for providing insight on Permianville Royalty Trust, traded on New York Stock Exchange under symbol PVL. It is a cash cow that provides its unit holder with ultra high monthly dividend. Royalty Trust may not be for every investor, but those who understand the benefits and risk of royalty trust can be on the receiving end of an attractive income stream. Thank you, and that's it for today. We'll be back with another video soon. If you want to read more about John's ideas, you can go to incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.